going on, everybody? Stas here. So the stock market was all over the place yet again today, guys. S&P 500 down 0.2%, the Dow Jones down 0.3%, and the NASDAQ 100 pretty much broke even, down about 0.1% on the day. And in this video, we're going to be talking more about the stock market, breaking down some technicals, going over a bunch of stocks here that I'm looking to buy right now in the stock market. And I also want to break down some earnings reports from Tesla, Chipotle Mexican Grill, and Verizon. And I also want to share with you guys what I'm personally doing right now in the markets and kind of where my head is at right now. So if you guys find value, hit the like button, subscribe to the channel, check out the free links down below, the Discord chat, the Facebook group, and guess what? WeBull actually upped the ante. Instead of 2 free stocks, you can now get 3 free stocks, each of them valued up to $1,600. Check that link down below. All you have to do is deposit $100. You get 3 free stocks, and I also get 3 free stocks, guys, since it is an affiliate link. So without further ado, let's get right into the video, starting off here with the S&P 500. And it seems like we're in a very similar scenario to what happened yesterday. A lot of choppiness, a lot of volatility, and it's due to one word, and that one word is stimulus, right? And I'm not a stimulus channel. I'm not going to go over it in this video, but all you guys need to know is we have not come to an agreement quite yet, and the markets are very volatile because of that. I mean, take a look. Yesterday and today, yesterday the S&P went from 3430 at the low up to 3460, back down to 3430, back up to 3470, all the way back down to 3430. So it was up and down choppiness. And today, guys, same thing. We opened up at 3440 up to about 3465, back down to 3430. We took out the opening price of the S&P. We double bottomed there, and we ended up rallying into power hour, and then power hour hit. We hit 3460, and guess what? The S&P tanked into the end of the market. So at this point, it's very, very difficult to trade these markets with the stimulus talks, with everything going on leading up to the election, which quite honestly is why I haven't been making many moves recently. And we'll get into that in a couple of minutes here. But overall, S&P, Dow, NASDAQ, very choppy. Same with the Russell 2000. They're all extremely choppy right now. And if we zoom out a bit to the 20-day 1-hour chart on the S&P, this is a critical level coming up. I've said it many times, and I'm going to say it again, 3430 on the S&P. This is where we ended up holding on the 19th of October. That was the low. This was on Monday, right? And we've been rallying and kind of consolidating since then. So one way to know if we're going to get more downside is if we break 3430. In my opinion, that will honestly trigger a lot of selling, and the markets are going to go down. S&P could end up going, and I've said this before, I'll say it again, 3380, 3385. That is the next gap that needs to be filled. That's if 3430 ends up breaking. And let's say somehow we strike a deal before the election, whatever, the markets hold 3430 on the S&P, and we end up breaking out of this 50 SMA resistance here on the hourly chart, which, mind you guys, it's a big resistance. You know, if we end up breaking that and ultimately breaking 3480, that is where the S&P could end up shooting back to those highs. So at this point, you just have to be watching 3430 on the downside, support, right, and resistance at about 3480, and this 50 SMA as well here on the hourly chart. So keep an eye on those points for the S&P 500. And if we take a look here at the Dow Jones, very similar. We're trading above that Monday low at 28,200. That was also a low from last week on the 14th of October, right? So if 28,200 breaks on the Dow, that is where we're going to see a gap down to about 28,000 flat, right? And if you're looking at the chart right here on the hourly chart, that's exactly what you can see. That's a 200-point drop. That would be around a 0.7% move on the downside. That's if 28,200 breaks. And let's say we hold it tomorrow, we rally up 28,400. It's going to be the resistance I'm looking at. So we're in a very tight window on the Dow Jones, 28,200 on the bottom side, 28,400 on the top side. So watch those two levels in terms of determining direction in the next couple of days here. And when it comes down to the NASDAQ 100, guys, the 100 largest companies here in the NASDAQ, a lot of the same, right? On the intraday chart, up and down, crazy volatility on this chart. If we go back to the hourly chart, you guys can see there's still a big resistance at 11,700 here, which is a bit worrisome in my opinion on the NASDAQ 100. Take a look here. We held it last week on the 15th of October, 11,700. We rallied up to about 12K, and then we ended up dumping. And then on Monday, we went to test 11,700 again as a support, and we blew right through it, right? So we broke that. We filled the gap down to 11,500, 11,600 pretty much, and that's where we've been consolidating the past 2 days. But notice how yesterday we failed breaking out of 11,750, right? And today we did multiple times again. Take a look here on the intraday chart. We failed right at 11,750, right around here, 780, whatever you want to call it, that general area. We failed there. We failed again in the middle of the day. And before, literally an hour before the market closed, we double top there. Not really a double top, but we saw a descending pattern. And then all of a sudden, the market tanked in the last hour. So 11,780, 11,800, 11,750, that general area here is a very big resistance on the NASDAQ, and I'm not too comfortable going long on, let's say, any ETFs that track the NASDAQ 100 until this level's broken, until 11,800 clears and we do something like that, and we're clearly not at that point in time quite yet. So overall, stimulus is still in the air. That's what's really holding back the markets and keeping the markets in this volatile state, as well as the election, the anticipation there. And there's so many factors, right? There's so many factors that's kind of pushing the market right now. So let me know down below, what are your thoughts? Drop a comment. Let me know any thoughts on the markets, stimulus. Are you buying? Are you selling? Or anything. And for me, guys, again, I'm kind of just playing it safe here. I'm holding out. I'm not making too many moves until we get some further direction here in the market. And when it comes down to my trading, again, like I just said literally a second ago, I'm not doing much right now, but I'm still holding on to 3 positions. And one of them is it's getting a bit ugly there. We'll get into that in a second. But the first two, Electronic Arts and Apple, I'm down a little bit on Electronic Arts, but Apple's right around a little bit above my cost basis. But EA, I'm in at about $133. I'm down about $6 here per share in my position. But I'm not freaking out, guys. I'm not panic selling. I'm not doing anything like that. I'm just holding on and riding through the volatility here. Ultimately, I think EA is going to be above 135. It has a lot of potential and momentum above 135 into the 140s. That's kind of what I'm holding out for. And at this point, the trend, if I draw this out for you guys, you can see, I mean, it's still up. You can see with today's price action, we ended up holding a higher low here from the previous and the one before that as well. So that's looking good in the short term for Electronic Arts. And Apple, take a look here, guys, AAPL. I'm in at about 115. I'm up a little bit on my position, but quite honestly, I'm not going to take the little profit I do have. I think there's a lot of potential here with Apple in the next couple of months. I feel like as the election jitters shake off in the next couple of weeks, we get more understanding of stimulus, who's the president going to be, and so forth. I think the market's going to just go up either way. And honestly, whether it's Biden or Trump that wins, I think the market's going to do well regardless. Honestly, I think the market's going to do well regardless. A lot of people are like, oh, if Biden wins, the market is screwed. Oh, if Trump wins, the market's going to do great. You know, I don't believe that, because you guys have to realize, if Biden wins, he's going to put an even bigger stimulus package into effect, right? And a bigger stimulus package means more money printing, which means the market could potentially go even higher, right? So I don't think you could argue that one president's going to tank the market. I think they're both. I think either way, the market's going to go higher, in my personal opinion, due to the money printing and the stimulus itself. And let me know down below. And kind of with that, I see Apple going higher. So I'm not taking little profit. The little profit that I do have here, I'm riding this out. And Workhorse, WKHS, is one that I'm down a good chunk on right now, guys. But like I said yesterday, I'll say it again. I'm letting this wave ride through. I'm riding through the volatility here, and I've said before I'm planning on holding this for a couple months. So a little price drop. I mean, it's not really little anymore. You can argue that it's a big price drop for my cost basis, but this little $5 loss that I have per share, I mean, it is a good chunk. I'll be honest, guys, but I'm not really looking to panic sell out of this because I still see the momentum looking up, right? We've seen multiple pull downs like this before. I'm not freaking out. I'm just looking to ride the wave. If anything, I might add more to Workhorse. I know you guys might be crazy. You think I'm crazy, but quite honestly, I might do that, especially if we get lower into the 18s, 17s tomorrow, some point this week, next week. I might bring that average cost down from, let's say, 24. Let's say if I double up my position, I could bring it down to, let's say, a 20 or less. Who knows? We'll see what ends up happening depending on where Workhorse goes. And that's the beauty of scaling into positions, right? You do go heavy up front sometimes. Let's say once you start a position, you go heavy, let's say, with 50% of your goal position. But there's always some room there where you could honestly decide whether or not you want to add more to it. And that's kind of the situation that I'm in right now. So let me know down below in the comments, what do you guys think, as always? And if you guys are enjoying the video, hit the like button. Let's try to get 400 likes. I challenge you guys. Let's get 400 likes on this video. So hit the like button. And don't forget to claim your 3 free stocks as well from WeBull while you're at it. So let's talk about some earnings reports. And the most anticipated earnings report so far, in my opinion at least, and I'm sure you guys will agree with me, has been Tesla. Ticker symbol TSLA. Tesla ended up reporting earnings here, and we'll zoom in a bit to the 5-day, 5-minute to see some price action here. Actually, no, let's go to the 1-day, 1-minute. And you guys can see what else is new. Tesla is going crazy after hours, very volatile. They reported EPS of 76 cents versus 56 cents estimated. So they crushed profit there, and revenue did very well as well. $8.77 billion versus $8.26 billion estimated. So they had a double beat there, which is what I'm assuming shot the stock up after hours, right? From 422 up to 441. And we saw Q3 vehicle production at 145,036 vehicles. And now, and I've said this before in previous Tesla videos, they're delivering, which was the goal, they're looking to deliver 500,000 vehicles in 2020. And they actually said, quote unquote, that remains our target for the quarter. And the target has become a bit more difficult. So that is, I don't know, guys. We know Tesla strives to have big expectations. So we'll see. I don't know if they're going to hit it. I can't tell the future, but based on the numbers here, 500,000, I wouldn't put it at a long shot. I'd say it's a good chance that they get it, right? Especially if they have, right, a strong Q4. So Tesla at this point, and we could go deeper into it, but guys, these videos would be too long. I might make a separate Tesla video, but that's what we're going to go over today, the brief stuff. They beat EPS, beat revenue, the vehicle production's looking good, and 500,000, although it might not be as achievable as it was a couple months ago, hey, they're looking to do it in 2020, and the stock's going crazy, so we'll see. We all know a big resistance is coming up on Tesla at $460. That's going to be a big, big spot where we could end up exploding. If there's pent-up demand there, we could end up exploding out of 460. But if we don't break 460, we might be under there for a little bit. We just have to see, guys. So Chipotle Mexican Grill, one of my favorite places to go. And the sad thing is, guys, I haven't been there since this whole crisis began. It's been weird. I don't know why. I wish I knew why, guys. I might go get some after this, actually. maybe. But they had EPS of $3.76 versus $3.40 estimated, and their revenue came in at $1.6 billion versus $1.59 billion. So they beat on EPS, but revenue they also beat, but it wasn't as wide of a beat as the EPS was, and the sales ended up tanking, right? Or not the sales, the stock from $13.60 to about $12.60. So that's no joke. I mean, that's $100 off the stock price after hours here. Well, not anymore. It looks like it rebounded a little bit, but initially it dropped $100. That's about 7%. And then you guys see this. Oh my God! Look at that green candle. Take a look. It ripped all the way back up, filled the gap entirely to the T, pretty much. That's insane. What? Oh, man, that just goes to show the market's crazy. It filled the gap entirely, and now we're back down to the lower 1300s. So Chipotle is interesting, guys. Q3 digital sales grew 202% year over year and accounted for 48% of the sales for the quarter. And that actually scares me a little bit. 48% of the sales came from the digital sales, and I'm assuming that's if you put an order through the app and then you go and pick it up at the store, and that's kind of a reason why I haven't gone to Chipotle, and I can't imagine how many others are like that. How many people out there, and let me know in the comments if you're one of these people, how many people stopped going to Chipotle because they don't like the picking up of the burrito bowl or the burrito. I personally like going there and physically ordering it and telling, okay, I want more rice, more beans, whatever, and customizing it myself. I don't know if that's because I'm weird, but I feel like that's an interesting stat there. 48% came from online. And, yeah, I mean, there could be people out there that stop going to Chipotle because they can't go in the store, which could be affecting them a little bit here, but we won't know until a couple quarters later, and that's kind of just my personal experience. I could be crazy. Let me know your thoughts down below, but that's just what Chipotle's doing there and some thoughts from me. And they actually opened up, which goes to show that they're still growing the business here, stores too. They opened up 44 stores in restaurants in Q3, and they closed 3. So they opened up 44, closed 3. That gives them, 41 that are still, up, positive 41 there. So that's looking good for Chipotle, and I'm looking at this as maybe a dip buy potentially, if we end up holding this 50 simple moving average here on the 4-hour chart as well as 1300. Maybe we can play Chipotle from 1300 up to, let's say, 1360. That could be a move there. And Verizon ended up tanking a little bit here, and it's been going down ever since the Apple event. Verizon had EPS of $1.25 versus $1.22. Revenue came in at $31.5 billion versus $31.59 billion. So they missed there a little bit on revenue, and EPS came in a bit of a beat there. And, I mean, Verizon, guys, it's not the flashiest, most awesome company out there, let's be honest. And, it's not really doing much after earnings, so we'll see what happens here. This is not one that I'm looking to trade. If anything, I'd add this to like a dividend portfolio. But, hey, I figured I'd cover it here on the channel for you guys very briefly. And earnings are not done quite yet. We have AT&T tomorrow, AAL, American Airlines, Coca-Cola, ticker symbol KO. We also have LUV, Southwest Airlines, and Intel. And watch those airlines, guys. I'm going to say it every video here to really hammer into your heads. Watch out for these airlines and a potential stimulus package. We've seen these airlines go bananas before on earnings, on news regarding bailouts and so forth. So keep an eye on AAL and UAL tomorrow and a bunch of those other ones that we just mentioned. So let me know in the comments, what are your thoughts as always. Now let's talk about some stocks here, some other stocks that I'm looking at. And I know we've talked about DraftKings a lot, but I'm going to go a little bit deeper into it in this video and talk about some of the things they've been doing and why the stock's been going down a bit here. So DraftKings is now, they just did a deal with Turner Sports. DraftKings is now the exclusive sports book and daily fantasy sports provider across select Turner Sports and Bleacher Report properties, excluding the NBA programming. NBA has a deal with FanDuel, so they're doing a lot here with Turner Sports, and Bleacher Report, which I think is great. I love that app, Bleacher Report. And this comes directly from Ezra Kukarch. I hope I'm not butchering that name. I know I am. She's the chief business officer at DraftKings. She said Turner Sports platforms provide exceptional content as they continually captivate sports audiences. Their medium aligns with the DraftKings brand, and we look forward to delivering a seamless experience for readers and viewers while also broadening our visibility. So I like this partnership, getting in front of Turner Sports, getting in front of the audiences that use these platforms, Bleacher Report. That's a great way to get more customers, no doubt about it. And we have to talk about the lockup period here, guys. It ended up expiring yesterday, if I'm not mistaken, on the 20th, I believe here. And the lockup period, for those of you guys that have no idea, during the IPO lockup, company insiders and early investors cannot sell their shares. So when a stock goes IPO, there's usually a lockup period. You guys remember this with Uber like a year ago or something, right? When the lockup ended, and I believe the stock went down after that, or it went down. You guys remember, right? I can't remember exactly off the top of my head, but lockup periods is when company insiders and early investors cannot sell their shares, helping to ensure an orderly IPO and not flood the market with additional shares for sale. Lockup periods usually last between 90 to 180 days. Once the lockup period ends, most trading restrictions are removed. The end of a lockup period sends a strong signal about the confidence of the largest shareholders that have. Wait, I messed that up, guys. Let me repeat that here. The end of a lockup period sends a strong signal about the confidence the largest shareholders have in the company's prospects. If institutional investors decide to dump the stock once the lockup period ends, which for DraftKings, again, it just ended yesterday, then this suggests they have little faith that the company is worth holding. So, yeah, I mean, this is something to look at here for DraftKings. You know, lockup expired yesterday. I was reading about Robert Kraft was dumping a bunch of shares. You know, there was a block of 1.7 million shares placed by Morgan Stanley at $42.15. So what I'm doing right now with DraftKings is I'm giving it some time, right? I'm going to give it a little bit, a couple of trading days, see what it does here, see if it continues to downtrend. And quite honestly, guys, on this 5-day, 5-minute, today's break was not good. Today's $42 support break was not a good sign, right? We held that back on the 19th, on the 20th. We did today, but the second 42 broke. We made a lower low, and the downtrend is technically continuing, right? So at this point, DraftKings could go to the high 30s, and that might scare you guys, but it's the truth. On the 4-hour chart, you can see it here. The next gap to fill is at about 39.30, and if that breaks, we might be going to the mid-30s. And I think in the $30 level, if we do get there, I'm going to buy shares. Maybe not even as a swing trade, guys, quite honestly, as a long-term investment. And I've been doing more research into DraftKings these past couple of days, especially in the past couple of weeks, ever since we've seen this massive drop. And I like the prospects, especially as, the sports, I don't even know if I can say it if I get demonetized or whatever, but once this gets legalized across the U.S. More and we get more customers, there's going to be a lot of potential here for DraftKings, and they already have the brand. So I like this company, guys. I really do. And the other one that I want to talk about today, a couple more here, guys. Square, ticker symbol SQ. Down about 16 points here from the highs. You guys can see from 193 down to about 177. This one might end up seeing some support in the lower 170s. I don't know if the selling is done quite yet. If we get to 170, 165, right around this 180 SMA on the 4-hour chart, I think Square would be a pretty nice entry point in my personal opinion, right? And another one that's taking a bit of a pull down here is Chewy, ticker symbol CHWY. This is an awesome company for pets, right? I just got a dog. Well, not just. Wow, time flies, guys. I got a dog back in May, so it's been about 5-6 months, and I've been a customer of Chewy ever since. And I can't imagine how many others are just like that out there that get a dog, get a cat, whatever, and then they go on Chewy and they start using the products. So I like it so far. I'm a consumer, and overall the trend here down from about $70, holding the mid-60s. We're holding that 50 SMA on the 4-hour chart. This could be a dip buy. This very well could be a dip buy here on Chewy, and two stocks here that have a lot of momentum, not necessarily dip buys, but they're just running like crazy. One of them is Pinterest, ticker symbol PINS. This is running, I'd argue, on the backs of Snapchat crushing earnings and going up like crazy today. Let's take a look at that very quickly. Snapchat up 30% today. It was actually almost into the $40 range, so it was up like 35% at its peak. So I'm watching Snapchat, I'm watching Pinterest. These are momentum plays. And the other one is PYPL, PayPal. PayPal is launching a new service enabling people to buy and hold and sell Bitcoin. The stock's up 5.5% today. I'm loving it as a shareholder of PayPal. I own this stock in my long-term portfolios here, so I'm very happy about that. And yeah, it's not at a dip buy. You might not get the best swing trade entry here, but there's momentum, and you can't beat momentum. Sometimes stocks that are at a peak, a quote-unquote peak on the chart, they could go higher. For all we know, PayPal could be 220, 225 tomorrow. I mean, we saw it with Snapchat, right? We saw Snapchat was at 29 before earnings. Nobody knew it was going to go up to $40. So you guys, you have to realize momentum can continue despite it being at a high point on the chart. And the next one here is going to be Run. I know I've talked about this a lot. This one's one of the beaten down stocks that I'm looking at. And a lot of people were asking me, Stas, what do you think about it? And the truth is, today's 9% negative day is not too good of a sign, guys. It's not. Let's just put it that way. Because we broke $60. That was a big level of support. It was an old resistance from back in the beginning of September. We held it in the past couple of trading days multiple times. And now, the second we broke it, we hit a lower low. And the downtrend's continuing, and quite honestly, it's looking like a falling knife to me. It seems like there's no bottom in sight. Yeah, quite honestly. I mean, we could see some sort of support here at about 57, right? That was an old resistance from the middle of September, so maybe that holds and we see a rally back up to 60, but until 60 breaks, until we see a reversal, I'm not really messing with Run here. Same with Fastly, guys. FSLY. Fastly down another 5% today. And what did I say a couple of videos ago? We literally called this out, right? We saw the initial drop. It held 90. A lot of people were like, oh, let's get into Fastly now when it was at $94 a share. Let me pull up the chart to show you guys. It was literally at 94 a couple days ago. And a lot of bulls got trapped right here, $94. A lot of bulls got trapped. And then I said this, I was like, don't rush into it. Give it some time. We could go down further. And what do you know? 90 broke. We filled the gap now all the way to 78, which I did mention in that video when we were talking about the initial drop of Fastly. So at this point, 77, 78 is a huge support, no doubt about it. I mean, we haven't broken under this level. We haven't been under this level since the end of June. So if we break 77 on Fastly, guys, that's not a good sign at all. But if we end up holding it, we might see a short-term recovery rally, I'd say, up to about $86, $87. That's very possible. So watch out for these. And another one that's being down is Helion, guys. Ever since it went from Shell to Helion, that transfer occurred, right? This stock's been getting decimated. And for me, I can't give you a full description on the business, on everything going on, because I don't really track this company too much. But technically speaking, this is going to turn around at some point. We can't say when, but it's been beaten down day after day for pretty much all of October. There's going to come a point where we bottom out, and one could argue that, hey, maybe that's at about $18. Maybe that's at about $19. Maybe it's at about $20. I mean, we see a big support coming up at about $19, $20. So if we get close to that, excuse me, guys, we might see some sort of support. But overall, it's kind of like in the same situation as Run and Fastly and even DKNG. It's a falling knife, so we have to be very careful with this one. Very, very careful. And the last one here is Upwork, ticker symbol UPWK. This one's down about 4%, and I'm very excited about it. I want it to go down even further so I could end up getting in at about $17, $18. I know that's probably a dream. It probably won't come true, but at that point, I think Upwork is going to be a pretty nice deal. $17, $18, right around this 180 SMA on the 4-hour chart. And mind you, they are reporting earnings here pretty soon on the 4th of November, so that could end up fluctuating the stock. So overall, guys, that's it for this video. If you all enjoyed it, make sure to hit that like button. Remember, 400 likes, that's the challenge for this video. Also, subscribe to the channel, check out the StriveSmart Discord chat, StriveSmart Facebook group, and don't forget to claim your 3, yes, you heard me right, 3 free stocks from WeBull, each valued up to $1,600. Link down below. All you have to do is deposit $100, and that is when you get your 3 free stocks. So I'll catch you all in the next video. Thanks for watching. As always, stay safe out there, guys. Keep crushing the markets. Peace out.